love the channel and find it useful in becoming a happy retiree. Subscribe today. We're faced with a stock market high, and where do we go from here? And it's much harder as an investor to know what to do moving forward once the market's already done well, relative to when markets are actually in the doldrums, like in 2009 and 10. We had a lot of runway. Valuations were a whole lot lower, so stocks were, quote, cheaper. And the outlook when stocks are really cheap is actually really, really good. So it made it for, even though it was an emotionally scary time coming out of the recession, it made it a really easy time to invest. Now we're on the other side of that. We've had a recovery. Stocks have already done well. Where do you go from here? Now, this argument that we've been dissecting between these two stock strategists, if you're just tuning in, I'll remind you, there's a conversation this week that really caught my attention. Thomas Lee, he's a big-time Wall Street analyst, and then Mike Wilson, another big-time guy. Both were, Lee was the head equity strategist at JP Morgan for a long time. Mike Wilson's the current head strategist for Morgan Stanley. So they're both smart guys, been around Wall Street 25 years. And they're both saying, hey, one of them saying, hey, I think we got a long runway to go. And I think that we've got 11 years to run in this cycle. S&P 500 is going to hit 6,000, which would be this is the S&P, not the Dow, over 7% average rate of return to get there, all the way to 15,000, which would be a 16.5% rate of return to get there. But on the other side, we've got Mike Wilson is saying, no. He's saying, no. He said, as in the short run, it's pretty clear to me and us and his firm that we are in a late stage or cycle from an economic standpoint. One, he says, hey, the unemployment rate's 4.1% means there's not a lot of labor left. Not a lot of people that don't have jobs that can go get jobs to increase output in the economy. So at that point, costs go up, and that's when companies fire people. And then the cycle ends. That causes an economic slowdown. And to say that we have 2 or 3 more years left in this current expansion, he says, hey, that's misplaced for a number of reasons, particularly the reason going back to labor. But it's this fascinating window into the divergent opinions on Wall Street. Both of these guys, 25-year veterans, both on the top of their industry, both super educated. Wilson's got an MBA from Kellogg at Northwestern. Lee went to Wharton. And they're battling it out over TV on where the market and the economy goes from here. So no wonder there's so much confusion on investors' part. No wonder you're confused. No wonder. Smart guy A basically says, hey, the good ride's almost over. Smart guy B says that, hey, this current run-up has some legs. It's got room to run. And even more runway over the next 11 years. So confusion sets in. Hi, I'm Wes Moss, and thanks for taking a minute to hear about what's so different about my new book, You Can Retire Sooner Than You Think. So unlike other retirement books, this book will give you a step-by-step guide, whether you're in your 20s or 30s or 40s or 50s, to learn from what these successful and happy retirees did to get there. I hope you enjoy the book, but more importantly, I know that it'll help you retire sooner than you think.